Sandip Agarwal joining in on the conversation this Friday evening, fund manager and co-founder at Sowilo Investment Managers. Sandip, are you liking the gold loan companies right now?
Yeah, hi, good afternoon, and thanks for having me on the show. So yes, gold loan is one business which is very good, and we have been always liking the business, primarily because the safety and security in that lending is much higher than the other means of lending. And also, I think that the ticket size is very attractive, and people, as the management just mentioned, I was hearing to the interaction, people actually give gold, they want to take it back. So that is the most important thing. So they use the money for some purpose, personal or business, and once that purpose is fulfilled, they repay that money. So I think it is a very simple business, and I have seen that simple businesses do generate good returns. No much complexity involved.
So what's your favorite in this space, Sandip?
So, we run a PMS, so stock specific comments are very difficult, but I think we like the whole space. In fact, we play the whole gold asset class through the financiers, the lenders, the jewelry makers. So we love this asset class gold very much, and we play it across the chain, right from jewelry to the QSR side to this lender side, all the aspects we play.
Kunal, a word on these names, some of the gold financiers, maybe a Muthoot Manappuram. And Kunal, if you can couple it up also with your stock recommendations for this afternoon. We haven't had a chance to take your ideas.
Yeah, so I think at the start of the show, we spoke about Muthoot and Manappuram, both the stocks. So I think the view continues to remain bullish on both the stocks. Coming to the stock specific idea, today has been the day where the market has been lackluster. The hero of the day could be the PSU banks. And I think here the momentum has started to build up. So here would be my first pick, would be the big boy SBI. On the technical charts, the stock has given us a fresh breakout with volumes. The volumes have been above the average what we have seen in the last 10 days. So clear, but there is volume-based buying plus the stock has given a symmetrical triangle breakout on the technical charts. So we believe that this momentum will continue for the next 3 to 4 trading sessions. And that's why it's a buy at the current levels, trading around 812. One can keep a stop loss of 790 on the downside and look for targets of 830 to 850 on the higher end for SBI. So that was the first stock which was looking great on the buy side. The second stock where I can see the momentum getting built up and I think this will again keep on moving on the higher end, and that is Hudco. Again, the housing finance companies are also looking good to me, and Hudco has given us a fresh breakout in today's trading session. 241 is where the stock is currently trading. The momentum is starting to build up, and we expect this to continue on the higher end. So 254 to 260 is what I'm expecting on the stock in the very short term. One can keep a stop loss of 230 on the downside.
Hutco SBI on his radar. I wonder if Landmark Cars is our bulls versus bear candidate today. And Puneet is joining us for more on that. Under pressure after a massive drop in profits in Q4. But Puneet has found a bull's case as well to go with the bear's case?
Well, definitely, and I had to look at the yearly performance as well because it's been a very tough year for the company, caught between a rock and a hard place. And, if you can look at the first bull and bear case, that's definitely trying to signify that because while they've added brands like MG, M&M as well as Kia to their forte in this particular year very meaningfully, they were added in the almost the last year, I think about 6 quarters ago, but the scale up of new showrooms have happened in this year. They've of course come at a very high cost. In terms of FY25, the revenue growth was 22%, but the expenses have gone up actually by 24%, and that's largely because of increase in finance cost, employment costs as well as other expenses. And hence the EBITDA margins have fallen for the full year as well, which already are in a very tight band of roughly between 4 to 5%. And again, it's fallen again in this particular year, a second consecutive year of margin fall. When you look at the second bull and bear case, they are one of the premium sellers of cars from brands like Mercedes-Benz. The Mercedes accounts for 40% of the company's sales as well as revenues for this year. what is interesting is what the company mentioned as one of the key reasons of why it slowed down in Q4. They went on to say that the sale of Mercedes-Benz in Q4 on a YOY basis was lower than expected due to capital market volatility. And that's essentially something that they've said in their official press release to take note of. The third one's, of course, the showrooms part. They've added 23 showrooms that will aid growth in the next year as well. But the finance cost has increased meaningfully by 40% for FY25, and that's largely because the company has to maintain inventory at new showrooms. So that is expected to come down next year over the second half, but definitely being impacted there. And finally, in terms of valuation, and here is where it gets interesting, it's trading in line for FY26, in line with the car makers actually. It's slightly more expensive than Mahindra & Mahindra for FY26 on a price to earning basis. But the key aspect is that the margins for the company are roughly 1/3 of the said automakers. So for a person taking a punt into this stock, what moat could it be? That's of course something to ponder about, because the OEMs which the company sells for the cars are roughly higher in terms of valuations in line, but margins almost 3x of something like a landmark car. So that's the key question for now. FY27 seems promising as of now, but still some time away. But for FY26, that's the bull as well as bear case for landmark cars.
So valuations definitely gives it some kind of a reprieve. Sandip, I don't know if you can comment on Landmark. Did you see the results?
So, I will not comment on Landmark, but let me put it this way that, we love this space of after-sales service. These businesses are actually, while they sell cars, but in selling cars, they may, break even, or they may be able, it may be only enough to take care of their cost. The whole cream is in the after-sales services, because I'm sure that we all own cars, and if you see the kind of servicing charge which they put on when it goes for servicing, particularly in Mercedes, there is no free servicing. So once your car goes for servicing, it is straight away 98,000-99,000 rupees. I think out of which only maximum 10 to 15% will be the COGS cost, and balance is gross margin. So once your expansion of the workshops is over, broadly over, then that operating leverage plays out in a big way. So we are very big fan of this kind of businesses. These are structural stories. India's per capita income is going to keep on going up, and as it keeps on going up, more and more cars will have to go for sales, after sales services, and more cars will get sold. So we like this kind of businesses. Very hard to comment on particular case of Landmark, but we love this kind of businesses.
In this business, then, I mean, you're not talking about Landmark, but then they are, a key candidate in this space, isn't it?
Yeah, so there are not many, but you can always play through proxies as well.
Okay. Kunal, are you looking at Landmark? What do you see on the charts?
On the charts, already the stock has witnessed a sharp correction from the high levels. Now we have witnessed accumulation at the lower levels. Still not a buy candidate for me. I'll wait for dips towards 420, 400. That would be an ideal opportunity to go on the long side.
By the way, a stock that is doing really well is LIC. LIC is up 20% in the last 1 month. May not be having a rara move today, but it's trending and it's trading at the high point of the day. So bear that in mind. I wonder if the other insurance plays, which is HDFC Life or ICICI Lombard General Insurance, are also doing well or not. Just pull those stocks up for a moment, because some of those, no, not really. So it's only an LIC specific move. 20% in the last 1 month, up today as well. Remember, the chairman in an interview with NDTV Profit mentioned that they expect that the VNB margins will move from 17.5 to about 20%. So watch out for that one. And viewers, watch out for Lumax Auto. I'm changing tracks now, because that's the big buzzer of trade today. Stock has staged a very sharp up move on the back of Q4 numbers and strong guidance at that. Let's get in Puneet to give us some details about this. Puneet, what is the guidance like?
Well, thank you for that. So definitely very, very strong numbers for Q4. Revenues up 49%, EBITDA is up 50%. and that's taken the margins to 14.6% in this particular quarter, while the profits have also inched up by 54%, again taking away. Now, the company largely operates as an auto ancillary company in the lighting space, and it has supplied to players like Mahindra & Mahindra, which is one of its key customers, accounting for 27% of the revenues. And over the last 1 year, Mahindra is the only car maker which has shown double-digit growth in terms of sales, both for units as well as for revenue. So essentially, Lumax is one of the biggest beneficiaries of that. And now with the new electric vehicle launches, Lumax is the only supplier to M&M. With that, the company has actually come out, and a lot of the stock reaction today is coming from the guidance. They've given an FY31 target of roughly about 19,500 crores in terms of revenue. Revenue for FY25 was 3,600. So taking a huge growth. This will, of course, include 11,000 crores from acquisitions, and that is going to be a very interesting strategy, while the organic growth will be roughly about 8,500 odd crores. They've also mentioned that EBITDA margins for the company will be 20% versus the current 14 to 15% range that they have. And that will increase the profits as well meaningfully. They've also mentioned that the share of future as well as the EV mobility going forward will increase to 20% from 4%. So very, very strong guidance for this company. Market cap between 3 and 4,000 crores, but the growth targets are very, very strong for Lumax Auto.
You've had a busy day, Puneet, and I think a busy start to next week, because auto numbers will be out, auto sales data, which we will start seeing from tomorrow, and we'll of course discuss that trend on Monday. What is being expected?
Well, it'll be three key players to watch out for again in this particular month, similar to the last month. At least and two of them are from the two-wheeler space. We're expecting TVS and Eicher Motors to have really strong growth again in this particular month. We've seen around a 23% growth for Eicher Motors, while there'll be a double-digit growth that's expected for TVS as well in this particular quarter. What's interesting is that from the in terms of the two-wheelers, we're seeing the month-on-month recovery of Hero is what I wanted to mark, a 71% growth, because in the last month, which is April, the company just had a very big fall. They also had some inventory correction, and that is expected to reverse in this particular month. So TVS and Eicher is something to watch out for. In terms of four-wheeler space, Mahindra again continuing. We spoke about Lumax being one of the key beneficiaries, and Mahindra has continued its double-digit growth, expected to report roughly 13% growth in terms of volumes, while the rest are largely expected to have a somber month of May. And finally, in terms of commercial vehicles and tractors in CV space, we are expecting VECV, which is the commercial vehicle arm of Eicher Motors, to continue its growth. E-vehicle generation has gone up, and that's a positive for new sales, but largely we've seen financing being slightly more tighter in this environment, and hence we don't expect that kind of very high growth. But VECV is coming off a decent base and should be one of the beneficiaries. And finally, in tractors again, the early onset of monsoon is a very, very big positive for tractor makers. Almost 4 to 8% growth for both listed players, but Mahindra will have the higher growth owing to its higher share of sales in the western markets, especially Maharashtra, Karnataka being one of the key markets. So three key winners will definitely be Mahindra, Eicher, as well as TVS Motor.
Out for Mahindra, Eicher and TVS Motors on Monday. Thank you for that, Puneet. All right, let's just go through some of the MSCI rebalancing, which is for May, which is taking effect today, actually. So pull up Coromandel International and Nykaa, that's FSN e-commerce. You'll see some impact there because they will be added to the global standard index. In the MSCI India Domestic Index, Coromandel International and GMR Airports was added, while Sona BLW Precision Forging was excluded. Additionally, Coromandel and FSN were included in the MSCI India Mid Cap Index. Let's see what's happening with FSN and some of those impact over there. Eternal also is probably seeing some impact of MSCI rebalancing today. So those are some of the things that you can mark. Kunal Shah joining us. Kunal, what are the BTST ideas you have this Friday afternoon?
Yeah, I think for the BTST, again, I'll go with PSU banks. They're looking very strong on the chart perspective. So here, the buy side idea would be central bank press consolidation breakout, what we have seen in the stock, and we expect this momentum to continue in the coming week. So central bank is a buy. One can keep a stop loss of 38 on the downside. and look for targets of 40 to 42 on the higher end.
Some other stocks are Godrej Agro, Bajaj Electricals, ICRA. We spoke about some of these, and ICRA had come out with its numbers in addition to Eternal, which are doing very well. Force Motors is at 12,660. The last 2 months maybe, Force Motors has doubled. Can you just pull up the this year chart if we can and just show the kind of move that Force Motors has had, particularly in the last 2 months. Look at that chart. 3 months, okay. It's been a stellar up move for Force Motors. I don't know if Sandip has a view here, but let me first take a view from Kunal. Kunal, if you were long here, would you take money off the table, Force Motors?
Yeah, I think I'll keep on continuing trailing my stop losses over here if I'm long. So for me now, 11,300 is a very strong support. So till the time that is not taken out, I'll continue to hold.
Okay. Sandeep, I don't know if you look at this one individually, right? And if it's a part of your portfolio, it's secondary, but is a company which was a motor supplier now doing something in vehicles at a much cheaper rate as well, and a near meteoric rise in the last 3 odd months, whereas the rest of the auto pack hasn't. So Force Motors or a view on the auto pack, if you will, two-wheelers, for example. We've had some accidents today there.
Yeah, so on the auto pack, we generally like the traditional players. We are not very gung-ho on the new players and the new technology because we believe that the whole the logistics chain, the services chain, and everything which actually makes money, that is not in place, and it will take some more time to reach there. Until that time, these companies will have challenge in generating positive cash flows. But the traditional players are much better positioned. They have a very strong balance sheet, and we are reasonably confident that they will be always better placed because of their balance sheet strength and R&D to make more profitable business from the new technology as well. While I won't comment on Force Motor specifically, but let me put it this way, that I have been recently to many jungle safaris, and I have been seeing that the traditional gypsies which were used in safaris are now being replaced very aggressively by Force Motors. So that is some anecdotal which I can share with you. Obviously, as you showed the chart on the screen, the stock has done phenomenally well. And this company actually last 7, 8, 10 years, if you see, they do extremely well. The stock does extremely well in very small span of time. And then again, it undergoes time correction. So it is a very, very strong structural kind of story which needs a lot of patience for investors.
Just another stock that we should look at very quickly, BSE. Look at what's happening to BSE this afternoon, and it has been strong actually most of the day, but at 210 right now. Kunal, any views on a BSE?
Yeah, I think here the momentum is continue to grow stronger and stronger. The high levels, what I see is 2,900 for the stock in the very short term. So if anybody is holding long from the lower levels, continue to hold. Keep a trailing stop loss of 2,400 on the downside.
This is, I don't know if it's a proxy play for the NSE pre-IPO buzz or what the view there is. Sandip Agarwal, we reported a few days ago about the nearly 50% jump in the pre-IPO value of NSE per share. And, of course, we talked about the risks when you go pre-IPO and you invest there, but just any thoughts there on this entire index play and BSE as well?
So, indexes are very, very good business, to be honest, and we love them a lot. And we have always been, participated in them in some or other way. And I think the only thing is that, sometimes the valuation is very demanding. But remember that, if I recall rightly, InfoEdge is one such stock which was always in scarcity. So in the sense that there were no optional plays to that, alternate plays to that. And so the premium it used to command and today also command is very, very high. Similarly, index plays across the globe. If you see, there are only 1 or 2 players majorly, and they always are at a substantial premium to other financial intermediary businesses. So I think the premium for index business will be there because it is near monopoly or duopoly at best. And it is a growing space, growing business. The penetration of equity very low in India, so it's a structural story. But when you buy at a particular valuation which is uncomfortable, then you may have to be mentally prepared for no returns or long time corrections. which I think, long-term investors can definitely take a call on.
Seeing unrealistic valuations is the question.
Valuation is a multiple of many things now. With if RBI cuts rate in a substantial way, then the whole Indian market will also look cheaper. The economic growth rate will pick up. So then today what we are seeing and today what we are talking about valuation can change in a very quickly. So very hard to comment. So it is a fact. Valuations are a factor of multiple macro aspects, and I think from macro perspective we are seeing that RBI may upfront the rate cut, and if RBI upfronts the rate cut, then the whole equity market will start looking cheap. That is the way I see it.